Hi, I'm Bert Nussbaumer from macrobeat.co.uk. What difference 2 weeks make since I was last on the show, and a lot happened since really in the market out there or in real life altogether. We're gearing up for the US election next week, and we did think that we will be very busy analyzing and over-analyzing every possible outcome, which we kind of did. But really in the last sort of few days, it's been sadly enough COVID again that sort of stole the limelight. We obviously have the Germany and France moving back into lockdown, which started to hurt the equity market, which obviously is a real concern in terms of the recovery from the sort of March shutdown. And that is really setting the tone out there, and we almost start to forget the sort of US election that we have on Tuesday. We had the ECB yesterday. I'm very glad that the ECB's Lagarde did sort of rip up her old speech from the previous meeting and try not to pretend to sell us the half glass full, which we probably realize isn't a good sell anyway. She did sort of highlight that more policy action is going to come in December. So she did give us a glimpse that the ECB is about to move again. Obviously, still the same debate, how much can the central banks do versus what fiscal policy should do, but definitely the ECB doesn't want to be left behind and is doing its part for what is to come, most likely. Overnight, we had a sharp sell-off in the equity futures with the news from the US that we had another record day on COVID with 91,000. So the Dow was down about 585 points at some point, and is sort of recovery as we speak. But let's look into some of the charts that I have for you today. The first one being euro-dollar. Euro-dollar has sort of tried to break higher again last week and failed. Now, yesterday we broke the 116.85 FIBO level, closed just shy below, which if we were to stay below, I think the euro-dollar is extending on the downside, possibly back to the July breakout area of 114.5, 115 area. On the next slide, we have the dollar index. We finally had a break and a close above that 2020 trend line above 93.40, close above the mid-daily Bollinger Bands as well. The first target will be 94.20. Only really if we take out that level do I truly believe that the dollar is back on the way up. I'm still generally constructive for the dollar, but obviously quite a bit of this dollar move is with the risk-off move we have seen, and which you will see later on the equity chart. The next slide, we have gold. Gold has traded down to 1866, even slightly below yesterday. This is on the back of a stronger dollar. People probably start to get a little bit nervous because I would think the market is quite long gold for obvious reasons. A break of 1836 would really be a worry, I would think, and there would be a risk that we would see further sell-off in gold, probably together with a stronger rally in the dollar. So 1866 has to hold, not allowed to go below 1836, otherwise this could turn into a rather nasty sell-off. The next chart I have is the Dow. We have broken that multi-month support line at 27,150 this week. We actually 9-ish% off the high currently. 26,141 is really the key level. That is the 200-day moving average. We have sort of not been below that since June, July. So close below 26,141 in the Dow would really see another leg lower, possibly another 10-15% easily. The last chart I have is the DAX. The DAX really is off 14% now from the highs, close below that 11,679 FIBO level, which is to me really, if you were to stay below, is a real trend change, not just a correction. And obviously the DAX has been sort of held back. Obviously Germany going into lockdown very soon. We have Brexit, which is still a big uncertainty for the German exporters. So there's reasons probably why the DAX is underperforming the Dow at this point in time. But really, next up, we're going to have, as I said, Tuesday, US election. You know, I guess you all know the various scenarios that are out there. Blue wave is still what probably is priced. The market had to probably take some out because of the pressure we had in the equity market. But you know, see you next Friday where we can discuss the real outcome on Tuesday, and I won't speculate today on that one. Thank you very much indeed. Bye-bye.